Do an icebreaker.
Yes. Okay, so we wanted to ask you guys, and you could type this, uh, or think about it for a second, or we can, maybe I can call you guys and you can share a little bit. But I thought it would be awesome to hear, what has been so far. Um, we're 6 sessions in, I believe. Yeah, this is
Yeah,
our sixth session. So,
yeah.
what for you guys so far has been your biggest takeaway, or something you feel like has been maybe eye-opening, maybe exciting for you to start learning about, or just for you personally, what's been your biggest takeaway since starting Grow, or yeah, since we've been doing these sessions. So yeah, you could type in the chat, think about it for a sec. Uh, or yeah, well, I'll call it
Yeah,
as
even if it's not a main one, just maybe just one,
just one.
if
Yeah,
something comes to mind that was like, huh, I haven't thought about that, or yeah, that's a good one.
nice.
Just saying the quadrants, that was a big one.
That was big for me.
Nina says money mindsets. Um, Micah, the perspectives that most people have about money are probably wrong. The three views, yeah. Quadrant, is that Joey? Joey, yeah, the quadrants is, that was definitely an eye opener as well, learning that it's definitely not shared enough, I would say.
Yeah,
All right. Oh, that's a good one, Dan. Yep. Yeah, because you hear that, you don't want to time the market. That's a very popular, uh, thought, and there's a lot of truth in that, but there also is cycles, and you getting in on the wrong cycle can take a long time to get out of it. If you
yeah,
buy at the top of a market, it could take a while for you to recover. You will, but more likely you will, but it just could take a very long time. Breakdown of what you should do with money. Breakdown for saving, investing. Yes, that's awesome. I'm kind of glad everybody has. It's interesting. Everybody's saying different things, which is pretty cool.
yeah. That's really cool.
So it's just kind of hit different people. It's never too late to learn. Love doing this together. Yes, we need. That's awesome. So we thought today we're going to do a little bit more interactive, um, and really just we've talked about the first session about if you go, I'm going to kind of go over the homework a little bit, and today we want to bring a lot of that together. We want to bring a lot of the things that we've asked, and if you didn't do the homework or you haven't got around to it, it's okay. But I do want to go over what we've been doing so that we put all of these things together, because these sessions are great, but I want to bring it back to a practical sense. Like, this is great, Pablo, it's opening my eyes, but so what? Like, what am I going to do with that? How do I get started? I still don't know how to invest, or I haven't done anything yet. So what we want to work on today is really, how do we get started? How do we make a plan? And we know that a lot of you are in different places, and so we're gonna talk about that. I want to bring up real quick. Let's bring up when we first did the sign up. When we first did the sign up, can everybody see this dashboard?
Yep.
This is the breakdown of people and what you guys were interested in. And, maybe it's changed now that you've learned a little bit of, more about investing. But we wanted to make it real simple. And we said, okay, we thought about this and said, why don't we make a plan and kind of have like a get started, getting started easy mode, right? Kind of intermediate. Maybe you already have some investments going, and that's like the intermediate level. And then in an advanced level, it's more like improving the investments that you already have, or expanding upon maybe on other areas, right? So just growing what you already have, but more like tweaking it. So we want to kind of build this together, and then we talked about the different areas that investments have, right? There's really the three main buckets, which were business, and everything under business, which is a lot. We have real estate, and there's a lot of ways to make money in real estate, and then there's like the financial instruments like stocks and trading And I would put like 401k and bonds and even crypto all up in that category as well. For this purpose, I kind of separated it just so we can, if you want to get started in certain areas. But more importantly, I think that this is a good time to, take this time to make a plan for yourself, right? So I'm going to go over kind of a little bit of some of the steps on what we're going to do together. But if you have those notes, just make sure that you answer, I'm going to put them here for everyone. The questions that we had in the homework were, what do you want your life to look like? And I know this is a tough question right off the bat, but it is something that you really want to think about, because how you invest and what you're doing, it kind of guides, like, if you're there, it prevents you from getting into that fear and greed trap. And it's really comes down to like what kind of lifestyle you want to have. So great time to start thinking about that. And if you did the homework, then refer to what you wrote. And that was like in week 1. In number 2, we asked, let me bring that in here. Number 2, we asked, what percentage of your money is going where, and what mindset do you have, right, around the money mindset? So if you need to reference the notes, go back and look at that. But we had this pie chart that said, where is your money going, if you guys remember. And so, really knowing where your money is, what percentage of how much you're making every month is actually being invested? Is it 0? Is it 20%, 30%? So really taking some time to know how much money do I have to invest is really what you want to get down to, right? And if not, where is my money going? I mean, all of us are working and you're making money, right? So we want to know where that money is going. And as a reminder, we'll send out that pie chart if you don't have it, but I think we attached it to the notes. And if you didn't get it, you can reach out and we'll send it to you. But really it was around how much are you saving? How much are you investing? How much is going towards expenses and bills? I think those are all. And then obviously you need to have a percentage for your taxes just set aside. And then that's your 100%, right? So in step 3, this is the one that some of you have been mentioning, which is, what quadrant are you in, right? And are you okay in the quadrant you're in? And if not, what changes do you need to make? That's kind of a tough one. That's a big one. I know that I realized early on what quadrant I was in, and it was very, very difficult to move out of that quadrant, especially if you're the primary breadwinner of your family, or you just don't know how to move out of that if you don't want to. I also want to say you don't have to move out of the quadrant. You can stay if you enjoy your job and you love what you're doing. You can certainly stay there. But what changes do you need to make? Does your money need to go more in the investment quadrant, and you need to get your money to start working while you're making money? Totally a good strategy. You can continue to make money in your job. The issue is you have to get that money to make more money while you're working. Yeah. So if that's a change that you need to make, let's write that down as well. In class number 4, we talked about investment levels and what kind of investor are you. So looking at the investor levels again, where did you fall in these investor levels? What were some of the mindsets associated with it, right? So that's important to know, is what level investor you are. And then again, do you want to move on to another investment level? And if so, what changes do we need to make there, right? And then the last class that we had, we talked about different investment styles, and we kind of focused in on stocks. And the reason we did that was because I think everybody generally knows that real estate makes money and that there's different ways to make money. I don't think we needed to do a whole session on the fact that you can do rental investments and flips and things like that. That's pretty general knowledge, right? It's usually the stock market that's a little bit more of a mystery to folks. So same with business. Everybody knows that businesses make quite a bit of money and you can start a small business. So we didn't have a whole session on that. But really the question here that you want to ask and answer is, Pablo, I heard you. I realized that we need to invest to build wealth, not only for ourselves, but for our generations and our family. Leave something for your kids, right? That we also noticed that, Latinos and minorities do not seem to be doing that. So we want to change that. I'm on board, but what style of investing do we want to do, right? And that's probably leading us to right now, so that's where we're at. So what I would say is, let's take a couple minutes to just kind of reflect on these questions. And as we're doing that, we'll fill out this board together on how we can get started in investing. But I wanted to spend a few minutes of time and give you guys a few minutes to just, if you haven't had a chance to do some homework, let's spend like, 5-6 minutes, not too long, just answering some of these questions. So we're starting to get a plan together. And if questions are coming up, feel free to put it in the chat. So it doesn't need to be, just everybody quiet or anything. But if you have questions, feel free to bring it up. But let's put like 5 minutes on the clock, Nico, to just work this piece out. Any questions on any of this? I know some of you may have missed one of the sessions. So maybe if I'm using a term that doesn't make sense, feel free to put it in the chat. I'm happy to explain it.
And Pablo, I almost feel like what mindset do you have should be its own separate question.
Yeah, on lesson 2.
Yeah.
Yeah, and we did them both in the same lesson, but yes, I agree. It's strong enough. You definitely want to answer that in section 2 as its own. The mindset, as a reminder, is like, we talked about like having a poor mindset, the middle class mindset, which the majority of us have, I would say, and then how do the rich mindset work, in terms of, as soon as money comes in, they're ready to invest it. Their first thought is investing and multiplying whatever's given to them. If you guys are ready with some of your answers and feel like you have a good starting point, you could feel free to put the raise hand so I know where people are at in terms of time. But yeah, a little bit of homework, just to write some stuff out. But I think it's going to be worth it to have at least a general idea of what you guys want to do, or even if we want to talk about, hey, what's if you're not ready to invest, what's the deal? Where
do you guys feel you're at?
Yeah, where do you feel you're at, or what have you been thinking about in these sessions? You guys keep coming to the class. It seems like you want to get more into investing. So what's either holding you up, or what do you feel you're missing? That would be really good to know as well. We'll go to about 6:20.
Yeah, I got a clock going. What up, Dan?
Was any of these, also, I'm just curious if any of these, sections were a little difficult. I'd love to know that as well. This is the first time we've done these kind of sessions, so that's really helpful to know, like, what area was a little bit challenging, or may have been difficult, either as a concept to understand, or you just felt like I got stuck there. That would be really good feedback to know, and so we can put some more effort towards that. 2 more minutes. I know some of these are probably difficult to do. Like if you didn't do the finance percentages, you're not gonna be able to do that in 5 minutes. That's okay. But that's gonna be a real important one to really sit down, look at your bank accounts, look at your income and figure out, hey, how much money do we have at the end of the month? And what percentage can we allocate to invest? And debt plays a big role in that as well. We'll talk about that in a second. If you are still currently in debt, you know, then what are you doing to get out of debt? Is there a strategy there? Is there a plan to get out of debt? And so if there's not, then let's get one in place for that. And in case you need a reference, I think most of you know, but all of these videos are going on YouTube. And also there's notes going out to your email. So if for whatever reason you're not getting the notes or didn't know there was a YouTube channel on it, let us know and we'll send you the links. Okay, 6:20. All right. Awesome. So, I wanted to kind of make this a little bit interactive. So if you want, does anybody mind sharing? Let's just so we can start building a plan together. For question number one, what do you want your life to look like? I can also give an example of some of the things that were important to me when I answered this question. For me, it was to have basically freedom is the most valuable thing. I don't know if Anna's on, but she'll probably, we've been married 19 years and she knows that is number one for me, is the ability to own my time, to decide what I work on and what I pursue with my time is like number one. That's everything to me, even more than physical possessions or anything else, salary, income, any of that. It's really to own that time and to work on projects that are important to me. That's number one. And then in with that is the ability to do things like grow or other things that are very important to me, because I can now decide that I want to allocate a certain time or whatever resources that I want to pursue those projects. So for me, that's number one. And then on the practical level, absolutely, we would like to purchase our home, and instead of doing maybe vacation a lot more, spend more time with the boys, do those kind of things. And some of that has already started and we have plans for other stuff, but those would be like secondary things on how we want our life to not be physically tied to one location, for example. So the ability to move around is important to us. So just kind of give you an idea of what that looks like. Does anybody else want to share? Maybe even someone that hasn't thought about that, I'd love to hear that. If you've maybe never sat down and actually did this exercise, I would love to hear from you.
Yeah.
Anybody else want to share question number one? Veronica says you're reading off my list. I think a lot of people are want to be able to travel and own their time for sure.
Yeah, I had exactly what you said. Freedom, do what I love, time with family, travel, and give back. So
beautiful. Mm-hmm. Which by the way, really coincides with the mindset of a level 5 investor, by the way, if you check it out. They give back, they work on what they want, they have a lot of freedom, they're free to pursue purpose. So it lines up a lot with getting to that level 5 investor really lines up with that lifestyle, if those are some of your goals. Joey, you said family to get to a solid place, have me stay home. Well, that's awesome. To raise kids. For Adrian, an encore career, freedom vacation home. That's perfect. That's exactly how you can answer that question. Very specific. And so you have some set goals of what it looks like when you achieve something. So that's perfect.
Hmm.
Yep, I see your comment, Micah. Yeah, I think
When I did the homework, I thought more about what, I think I know what I don't want it to look like, but I'm not completely sure what, I'd be working towards as an end goal yet. Like that's still to be developed. But if
Wow.
you flip all those things around, it's basically like your list, owning your own time and deciding what you do with it each day. And, obviously
yeah.
vacation time and just more time with family and friends, of course. But you also need something constructive to do with it. And after working for,
Long
20
time.
something years at one job, all of a sudden you're like, oh, I got to figure out a different purpose.
Yeah, yeah, that's
I was making money for somebody else, or I was, in my case, serving the country or whatever. But now I need to figure out what else to do.
just that, Micah, just that. Just putting in the time to protect our freedoms. And yeah, man, we really appreciate you. Yeah, I think that that is a difficult thing. Did anybody find this question difficult, or does anybody have any resistance to it? Like, I'm not, like, I can't get what I really want, so why even answer this question? Or maybe you don't see a way out. Does anybody feel
that way.
that? Because I think at times I have definitely felt that. I'm sure we've all felt like that at some point, but I wonder, even after understanding some of these concepts that we've been going over, is there still some resistance there in your mind to say, yeah, like I see what Dan wrote, houses on each coast, freedom to travel, freedom of time. Are you seeing a path to get there, or does that feel like some, out there wish that can't occur? What do you guys think? Like, Dan, I'll ask you directly, since, yeah, there you go. Okay, good. That's good. Dan says he feels like it's possible, but a concrete plan and the footwork hasn't happened. Awesome. So this is the beginnings. This is not an all-inclusive plan here, but this is a beginning of what this plan can look like, and some of the things that have to shift in your mind. So let's go to number 2, percentages of your money going where, and then what money mindset. And remember, there was a poor, the middle class, and the rich mindset. Anybody want to share their, what mindset they were operating under, and maybe something that they learned about where their money was going? Did anybody want to share there?
Yeah. Micah?
Yeah, I don't want to like monopolize this, but I used the tools in the banking thing where it shows you like what it tries to automatically categorize stuff to look and see where the money was going, right? Instead of just crunching it out. And, I feel like I was doing pretty good, but I thought I was investing more than I am. So I had like almost 6% going into savings. And then I had like 9% going into like, they were calling it security trades, but it was like auto reinvestments for certain things. And that was 9%. So I thought in my head, it felt like more. But total, I was putting 9 and 6% away towards, I guess you'd consider like investing or savings. But it certainly felt like more. And I have the breakdown of those two if we want to talk about that. But
no, that's awesome. That's awesome. Yeah, I mean, I think back, one example that I can give is there was a time where I knew an employer was putting an amount in to my 401k, and I didn't even realize that they were matching a certain percentage. Like, I never even thought about it or looked at it, and that was going on for years. So I was missing out on free money for quite some time. So, good time to go and check, take a look, lift the covers on your finances, look what's going on, pay attention to what's going on. You should know where your money is allocated in your 401k. Is it all in equities? Is it in bonds? How is it divided up? And what's the percentage that your employer, if they're matching you or not? I know here I recommended Dave Ramsey's approach, in terms of if you're in debt and everything, but I really do feel if your employer is going to match you, at a minimum, you should put the amount that they're matching you, because it's a 100% return. And it's tax deduction. I mean, there's a lot of good things there. So even if you are paying off debt, I think the math works in your favor. If you at least put the amount that your employer would match, you're going to have that growing at a double rate. You're going to basically put an amount in and your employer is going to put the exact amount in. That's 100% return, even if it didn't go up. So that to me is a no-brainer. So things like that, it's even, once it's in step 2, you'll uncover all kinds of stuff like that. You may also uncover There's tools like Mint or other budgeting tools, like Every Dollar, that can show you a breakdown of where your money is going. It's really important to know that. Are you spending a ton? Are you eating your investment? Are you spending it on friends and just going out? Do you have all these subscriptions that you don't even use and you don't even realize every month it's just chipping away? So
Yeah.
those kind of things are
They
become
add up.
pretty important. Yeah. How about someone talking about mindset? Did anybody shift a mindset or had an aha moment with a mindset? And as a reminder, that was the you know the poor, middle, and I'll bring it up here. Um, where's my folder?
And you guys can unmute and talk too if you
Yeah,
want.
you can unmute, guys.
I can share on this one really quick, but like I think I talked a little bit about it. But I think for me, I definitely was in a poor mindset when I started on this. And I think it was very I when I look back, and even still I feel pulls to make these kind of decisions of like very short term um emotional, like I see shoes I like, so I'm just gonna buy these because I have a little extra cash. And um or it was, I think the gap, like the gap of like time that I saw ahead financially was very short, and I think this has been an eye opener to see a little further. And then it's like learning the lesson of patience, of like, wow, if I really do this now, you know I'm really gonna see it, not even that far. Like you could really make a big difference in your financial situation in a generally short time. But even that was like so hard to do because I didn't see it immediately, didn't see the return immediately. So learning patience, and it's been a change of the mindset to and it's been very powerful.
Yeah, absolutely. Yeah, I have this image up here, and I would say the majority of us had the middle class mindset from what I gathered from the class, and the feedback, and that's really, the income comes in from your salary. Not, yes, you can make this go up, right? We already talked about the career paths and the quadrants that you can make this go up or down depending on what kind of income you have. But either way, it won't matter because you'll just jack up your liabilities. So if you make more money, you'll have a nicer car, a bigger house. But so the income salary becomes less relevant because we'll just, most people's expenses will match it wherever you're comfortable. So at some point, you got to get this box going. And the middle class has a tough time doing that because since there's this bills and then you got your expenses, there's not much left after that. There's just not much. And what this doesn't show is the middle class is great at saving. So the money that does come in that is not used ends up being saved to buy another liability, right? So that's that cycle that's so difficult to break. And that's why you can't leave the job,
That's
because
the race.
yeah, this is the rat race, right? You can't leave the job because if that stops, then everything just collapses, right? You need that income. So the mindset shift that the when money comes in, you buy assets is a very, like, just boom, it's a big shift in how you think. And it's difficult for us to train ourselves here because we're designed and taught by everything that we read in media and all the pressure and Instagram and everything to want more liabilities, you want nicer clothes, bigger house, bigger
More
car,
toys.
everything, you want all these things. Credit card debt starts going up, and keeping up with the Joneses kicks in, all of that kind of stuff. Whereas what the rich actually do is they buy these things. We saw it with the data, right? When we were looking at the wealth gaps a couple classes back, they're actually buying all of these assets, and that's what's driving this income. And so the income is coming in from every angle, multiple income streams coming in, they start adding up. And then from there is where you can, get some liabilities and get your expenses paid through the assets. And so that shift, it seems very subtle, but that shift in mindset is pretty powerful. And you do have to get it going first. And I think that's what Nico was referring to, that you have to have some patience to build this stuff up. And once it's built up and it's going, then it starts to bring a return. Like a lot of people, they hear, wow, most businesses don't make money for a few years. that doesn't mean don't start a business. It's just that's normal, right? You have an investment to start it up. And then as it starts making money, it starts to pay back. And then at some point you start getting positive. And then as you scale it out, it gets pretty ridiculous in terms of, how much it's making compared to what you're expending. That's a normal cycle for business. And we talked about that curve for any kind of asset. There's always that upfront work that you just got to psychologically know you're going to have to put in some work initially. But on the tail end, you get a real nice payoff, and the work really does drop quite a bit if we're doing more automated or like passive type income stuff. Even a rental property, it starts producing great returns once you got a good tenant in there. Once there's certain work that's done. Yes, it's work, but it's definitely not as much work as a salary job. I think we can agree on that. So this is a big one, and that's a huge one that can get us. How about the quadrant? A lot of you mentioned the quadrant. What was, anybody feel like they want to move quadrants, or that maybe they've been ignoring one of the quadrants? And I'll bring up the quadrant picture too, so we can.
Jess, I know you mentioned it. I don't know if you can talk.
Yeah, it's always loud here, but yeah, I mean, I've had many conversations with a lot of people on this call about the quadrant, and like feeling like there's a shift coming, at least in my world, in the near future, from E to either, like an S or a B. And I've been dabbling in I, but I wouldn't really consider myself like fully in there quite yet either. So I guess just like it was more eye-opening to see it in the picture view, that what I've been feeling, I guess, to see it more identified and clear. And it's helpful for me because I'm definitely a visual person to see, okay, you're here, and what will it take in order to get to, the quadrant that you want to be in on the right-hand side, those quadrants. So yeah, and the steps that need to happen in order to go there or get there, I guess.
Yep. Awesome. Thank you, Jess. For question number 4, the investor level, does anybody want to share maybe about the investor level? Bring that up here too. Did you realize where you were at? Any of the mindsets? Anything that came up with how you're for those maybe that have started in investments already? Any thoughts around the investor levels that you're at?
Yeah, I can take this one on and share.
All right, Travis.
Yeah, I realized, I mean, obviously, I talk to you about my investments from time to time, and Nico, sometimes a little risky. So definitely, I think of myself as a level 3, but I'm working on removing debt. That's another reason I feel like I fall into level 3, and just learning from some of those risky moves, and making every experience learning experience. So trying to move up from there, but I think I'm teetering in between a little right now.
Yeah. And in the investor session that we had, we talked about there's some things that once you learn, like, the fear and greed and how the market is really manipulated, and there's market makers, and how you realize that. And in every market, by the way, I'm not talking about one asset class. There's a lot of powerful people that are moving the markets, and they move you by fear and greed. And like getting your eyes open to that is a really powerful thing. And I think I told you guys, like, if I knew that, if somebody would have talked to me and we would have known, we would have saved hundreds and hundreds of thousands of dollars. We, like I've mentioned last time, we sold some properties during the 2008 crash. That was not a good decision, right? Because you're selling low, right? So that would be buying high and selling low. And when you think about it with your logical brain, you realize like that was not a good decision to buy high and sell low. Why would anybody do that, right? But that's exactly what we do. And the reverse as well. When it's high, we want to buy. We cannot help it. We just want to buy it when it's high. And when it's low, you're like, everybody's getting out. Cut your losses, get out. That's, understand that that's being manipulated. You are being manipulated to feel that way.
To feel that feeling.
Don't fall for that. And in fact, shift your mindset to a very investor mindset, which is, where is the maximum point of opportunity? And that's, we talked about it. It's at the point of maximum fear. So, we talked about the market. I'm going to bring it up here in a second. The market psychology chart, this one, very good to look at, and it applies to all kinds of markets. But this is the height, and you feel like everything's amazing, and then at the low, you're angry, you're depressed, you don't believe that it's true. But this red point, that is the point of maximal financial opportunity. So if you can train your mind to buy during that time and be extremely greedy, as Warren Buffett would say, right? Be greedy when others are fearful, and then fearful when others are greedy. It sounds so simple. It's a nice little meme for Instagram, but doing it in real life is actually
hard.
quite difficult. It's really, really difficult to do
Yeah.
because of fear and greed.
And we
So
just went through this.
understanding-
Everyone who just did crypto, we literally just went through this year. you know?
yeah, we just went through it. So, understanding those cycles and getting better each time and not giving up is really the key, right? What we said, like getting to this level 4 is just really just perseverance and continued education, as you see here, education, continued education, self-education, more education, learning and learning and learning about this, and realizing that you can learn. This is something that you can learn. If it seems difficult, it's because it's never been taught. That's why. You've just not been exposed to it. But I promise you, a lot of people are doing it, and they're making a lot of money doing it. It's something that, and it makes way more than a regular salary because of the way that it's designed, right? The way that the instruments are designed. So let's go to the last question, and then we're going to start filling up some of these boxes with the rest of our time. The last one is, what types of investments do you guys want to make? And this is a very simple question here. We've talked about different types of investing. What have you guys been interested in? What's kind of drawn, what's kind of caught your eye in terms of investing? I'm sure you've had some time to think about that one. I'd love to hear in the chat or unmute your mic. What do you guys think about? What do you guys want to invest in?
Real estate.
Ryan, Dan says land, real estate. Micah. Yep. Stocks and crypto for Veronica. Stocks and crypto does seem more accessible. Yeah, pros and cons to all of these. There's advantages and disadvantages. I know guys that are hardcore in every single one of these areas, and they all make a case on why one's better than you know what I mean?
A fair case.
They make a very fair case on why one is, the real estate guys is like, real estate's a hard asset, like it's physically never going to go to zero, like why would you not just do this, right? And then the stock and the crypto guys are like, a 5% return, you mean today? Like, you call that a return? Are you talking about in the last hour? Because I'm used to 60% returns and 60% drops, right? So, there's a lot more to be made there. Plus the fact that you don't have to deal with tenants, people, anything physical at all. You can buy and sell immediately. Try to buy and sell a house like this without 4 or 5 different types of people. No offense to the realtors in the room, taking bites out of everything. In crypto, you can get in and out, and a lot of the tools don't even charge you trading fees or costs anymore. So definitely advantages, disadvantages to all of these, right?
Yep.
Micah, you're absolutely right. Finding the right mix. Joey says real estate. And I think that's the right answer, Micah, is why not all, right? Is it too much? What's the Tony Stark, right?
It could be different for everybody, right? Like what the mix is could be different.
Your mix, it's more about your investing personality, your risk threshold.
Yeah.
So based on that, we made a little simple chart here. We got the easy mode, the easy button. Okay. If you wanted the easiest way to get started,
This is how you start, guys.
this is how you start. So let's start there. I'm going to go in order here. Crypto. If you want to get started in easy mode, I'm going to recommend, I'm going to make this a little bigger here. If you guys can see that. I'm going to recommend automated recurring purchase. What that means is you can download, and we're going to send out links to all of this stuff. Don't worry if you don't know how to buy crypto, if that's a mystery to you. We will send out, links to tools that we recommend that are safe that have been, you know, verified, and a lot of them are insured and everything like that, US based stuff like that. So what we recommend, the easiest way to do it is set up a recurring purchase, let's say monthly if you want, or weekly, however you want, and you just put some dollar amount. And what would I recommend in easy mode? I would recommend to buy Bitcoin and Ethereum, just Bitcoin and Ethereum. If you don't know what Ethereum is, I think most of you know what Bitcoin is. You know, it's basically digital money, digital gold. It's the largest cryptocurrency by far, and Ethereum is the second largest, and then the third, it just drops off. Like those two are the main, you know, gold and silver,
You have it
and
is.
they're the main things that drive the market. Buying them on a recurring basis, and doing the dollar cost averaging of automated recurring will protect you over time. It has been proven to be an amazing investment. It's got over 10 years of, you know, Bitcoin has over 10 years. So that's what I would hold. That's what I would recommend. And then do not trade it. Just buy and hold and keep dollar cost averaging. So what does this actually look like on a practical level? You would install an app, and we'll tell you which ones. You set in a dollar amount, like $50, let's say, or, you know, $100, whatever you feel comfortable with, and it will automatically purchase Bitcoin at whatever time frame you want. You don't have to do anything. In fact, you could completely forget about it, just like your 401k. Go on with life. And in a few years, check out your account and send us a big thank you. So I just promise you that if you look at it in a few years from now, you'll be like, the only thing, you can quote me on this, the only thing you will regret is that you didn't put in more. That's it. That's the only thing you're going to regret. But that's the easy mode there. Once you set it up, guys, you don't even have to think about it again. It will automatically purchase just forever until you stop it. So that's easy mode for crypto. Any questions on that? All right, let's go easy mode.
And,
for stocks.
Ivan mentioned something. YouTube videos he recommend to learn about crypto. So, we just made playlists
Yeah.
in the Proveo channel, and I'll send a link to it. But we've made some playlists of some of our favorite videos that to kind of describe how you get signed up, what Bitcoin is, on each of these: mindset, stocks, real estate, and crypto. So I'll send the link to you guys, and you guys can check out that playlist. But those are all like videos that will, you know, that I love. So
Right. Yep. But I'm just saying, guys, if you didn't want to do all that, this is your easy route.
so easy, guys.
How
It's
long
so
will this
easy.
take to do, Nico?
5 minutes.
About 5
I
minutes.
mean, probably 10 minutes to sign up, and then
Yeah.
it wants you to do it. So it's going to be like, do you guys want to set a recurring purchase for Bitcoin? You do like, okay, $200 a month, and
Yeah.
and you walk away. You're done.
So easy mode, let's say 20 minutes tops. Okay. It's definitely not going to take 20 minutes, but that's the easiest way to do it. You connect your bank account to the app. And once you do that, it'll just purchase every whatever interval you want. In stocks,
Oh, sorry, Patty, I had a question. Buying crypto Bitcoin is on Venmo. Is it okay to buy from them? There are, yes, you can buy from them, but there are some disadvantages from buying from like Cash App and Venmo or PayPal, because they're not. You can't trade on those platforms. So you could just buy, and you could just buy it, which is nice. But it is, there is a nice advantage of being on a something like Coinbase or Binance, because
yeah,
you're able to trade the coins with other coins, and you have a lot
that's
more
more in
options.
the intermediate and advanced mode. But yes, once you have your coin, you can move it to something else and exchange it for another one, and that's something that you will do in more in the intermediate or advanced. But
But it
yeah,
is
I
safe.
think
You could.
we'll send you some tools that we recommend. And yeah, Travis, you're absolutely right. You want the keys to your own wallet. So, you know, you could move that and put it somewhere private. That's the advantage of Bitcoin, is you could have a private wallet, put your Bitcoin in there, and there's no way somebody's taking that Bitcoin from you. It's not possible.
Yep.
So there's
Yeah,
that.
I was even saying with some of those like third party like Venmo or Cash App, you don't really have like a true wallet. They kind of own it and then give you access to it. So
Exactly.
that was the
Yeah.
other thing.
Same with Robinhood, for example.
Yeah.
Buying crypto on Robinhood is the same way. You don't actually own the keys to the crypto.
To the wallet. Yep.
On the stock side, I think a lot of you know this already, but index funds, which is a group of collections of stocks together that make it just much safer. The most popular in the world is like the Dow Jones and the S&P 500. I would also say these apps like Stash, Acorn, there's a lot of apps out there. There's a ton of them that just make it really easy. Like, literally you can make a purchase and it puts little cents in and invests it for you. And there's just all kinds of little tools that are out there that kind of help you. And then really, getting a financial advisor is not a bad move in the easy mode for stocks in terms of just making a game plan on looking at your 401k. Do you need IRAs? Do you need accounts for your kids? Things like that. So there's more. This is a little bit more traditional, but this is the easy route for the stock market. Buying an index fund, a mutual fund, using some of these simple apps, and just letting it kind of automatically with your income, set a percentage based on step number 2, and have that money go in there. It'll work. Yeah, mutual funds, mutual fund is like maybe one that's managed by an organization. Like Fidelity may have their own mutual funds, or Vanguard is like one of the most popular ones in the world. An index fund is just a group of a lot of different products in one, or companies or stocks, and it makes it safer because like the S&P has 500 of the best companies in the world in it. They don't all tank at the same time, so generally is like a view of the whole market. And if you look at it, it's been pretty much going up. Like the entire U.S. economy would have to crumble for it to go down, right?
Mom, did you have a question?
Yeah, that's what's so great about those index funds, why they're so safe.
Yeah, I had more of a comment. This is Lily. Just wondering for people, maybe not on this call, but just folks that are just on level 1 or level 2 and just mainly working hard to make means and raising a family and such, just when they start looking at investing, it's like, wow, how could I ever do that? I don't, I don't have the money. And I know it's the mindset, because there's always a way, especially if you have a job and you have an income. But what do you, I know this is it seems very advanced for that level. So I didn't know if you were considering all of that, or we're already there, level 3, 4, 5.
Are you talking about, so
like getting out of debt, Mom? Is that what
I see what you're saying. So when we're talking about
it's more than getting out of debt. It could be just making means, I don't have enough, I got to pay rent. I have babysitter, just both of them are working, mom and dad, and that kind of thing, so.
Yeah. And I think
it's a vicious cycle that we talked about in the very beginning.
Right. And what we did say when we talked about the investor levels is you're ready to invest basically at level 2, right? So at number 1, you're starting out. If you still have debt, we do recommend to get out of debt. And we did, I did the math on this, and I feel comfortable recommending that if you have long-term investments, you should keep those, especially if your employer matches it. At least do the amount that the employer's matching, but then you really need to be doing at least up to step 3 on Dave Ramsey's plan, which is, probably the best one for getting out of debt. So if you're not familiar with it, you go through these baby steps. Baby step 1, have $1,000.
Right.
If you don't have $1,000, that's, an emergency fund, that's step 1.
Yeah.
Then pay off your debt. Most people get stuck right here. I would say go, like, this is the time to hit it, get that debt paid off, use the snowball. And if you don't know, you can go to this site and it'll show you literally how to get out of debt using these methods.
And to make that their number 1 goal, and find resources to really not be afraid and to really go at it. And
you have to make changes to your life.
You're gonna make lifestyle changes.
There's a lot of that already documented. Like that has been beat up, right? You can go out.
I don't want to take you away from what you were sharing. I'm just saying.
No. I think it's good to know that what we're saying is you've already completed even step 3. So step 3, you have 3 to 6 months. I would definitely recommend 6 months if you can, in an emergency fund in cash. So whatever your monthly expenses are, multiply that times 6 and put that in cash somewhere. Once you have that,
Mhm.
then
You're
we're
primed.
saying you are now ready to invest after your step 3.
There we go. Yeah.
Why,
Okay.
why do we say that? Because let's just think about this logically. Let's say you have no reserves and you're like, Pablo, I love this quadrant. I'm switching quadrants. I'm going to start a business. And your business takes a while to generate revenue, or it tanks, or whatever. You made a bad choice. You made a bad decision. You didn't understand what you were doing, and you put all your eggs in that one basket. And you don't have a safety net. You don't have reserves. You are going to be hurting, right? And it's gonna really set you back. So the proper way to do it would be set up a nice reserve, and then baby step into investing. Don't go 100% on one thing. Like, try it out first. You know, if you're stock trading, trade on paper. I was going to buy at this price. You know, let's see if it would have worked out if you're a trader. Or you know, you can test things out if you want. If you're going to do the easy route though, then put in a percentage that you're comfortable with based on your budget. I think that we all can put a small amount, Lily, no matter what we're making, because we can squeeze out that amount for a pair of shoes or for, you know, different
Oh, yeah.
things, or a dinner.
Starbucks.
So everybody can put $100 in. You know, I think we can all do a small amount. I think it's just getting the ball rolling and seeing that investment over time grow is where we want to get to, you know? So you can
For
all
sure.
do this, you know, even in your income, if you think about it, most of people that are getting a job, money just gets taken out. You know what I mean? You don't even see that money. Taxes, you know, Social Security, things got pulled out of your account without you even knowing. Do you know why the government does that? Because they know that if they don't do it there, you're not going to pay it. They got to take it right away before you even see it, you know?
Mhm. Yeah.
We got
So-
5 minutes, Pablo.
Yeah.
We're just
Hey,
gonna
thank you.
we're just gonna get started. We're just gonna
Yeah.
finish this easy one, but we'll show you the other ones as well as we fill it out. But for business, I would say the easiest mode, we put some, you know, thought about this, is to start something either based in your skill or your wheelhouse. Like, don't get into a business that you don't know anything about, right? I know it seems so obvious, but you know, we get this bright idea and we're like, I have this idea to do something, and it's like, you've never done that. You know,
You have no skills.
I've never seen you do this, and all of a sudden, you know, you're gonna do that, right? The other one is a franchise, which is essentially a business that already works, and it's like a turnkey business, and you can purchase it, or you know, you can participate in it with other investors. It's very
Chick-fil-A.
easy to get started. Yeah. And then the third one is to just focus on whatever it is that you start, you know, to standardizing how you operate is really step number one. And the easy mode is, if you're going to start in a business, start to get some repeatable results. That is going to help with your growth more than anything initially. On the real estate side, I don't know if there's an easy way to get in there besides REITs. So REITs are investment funds that you can do. I know I was considering put it in this section, but you can actually invest in the real estate market on a more automated basis. I kind of looked into this. It's pretty cool. Very easy to do. You can, again, do it very quickly, because other than that, it's not easy. Like, for those, especially if you live in like DC or California, it is not quite easy to get into real estate right away at these prices. So we kind of decided that would be more intermediate or advanced because of the requirement of savings. Another advantage of stocks and crypto, you could start with $5. You can't get started with $5 in real estate. So you're going to have a little bit of a bag to, you know, a little bit of a money pile to get started. So anyways, we're going to send this out nice and filled out, but you know, we wanted to kind of focus with like the practical, how do we get started? And we'll send out, again, our tools. As you see here, we're going to have links. And, you know, these are links to different things and tools that you can download to just kind of, you know, get you started in investing. But the real takeaway today is coming up with a game plan, talk with your spouses, talk as a family. What changes do we want to make? You know, and really start to understand, okay, if I'm going to do this, what do I need to adjust? What plan needs to happen? I know Anna and I spent a lot of time talking about that, and sometimes that goalpost moves, right? We wanted this, and then now it's this. So Does that mean we have to shift our strategy, or how do we get alignment in that so that we can both be working towards a goal? It's going to be something that you're going to always be working on, but it's good to get alignment on it, because once you do, you start getting a lot of traction in that direction, and you start seeing the results. So yeah, I mean, that's all we had for today. I think that, you know, I wish we had a little bit more time to get into this piece of it, but I wanted to always open it up for any questions. If anybody had any questions or feedback, let's get into it. And if anybody's started in any of these, you know, I'd love to know, how did you get started and what helped you get started in it?
Yeah.
Were you asking, Pablo, if anyone started and what helped you get started?
Yeah.
Okay.